And hi everybody, it's Tim Reazor with Revere Asset Management, 3:45 here on a Wednesday night. So quickly, stock nerds, market lovers, before you and I begin, listen, lots to talk about tonight. So 2 trades I'm stalking. So we're talking about gold, so /GC, talk about CMG, one of my favorite stocks in the whole wide world. And then I want to talk about RIVN going lower. So we'll talk about that, where it's possibly headed. So listen, but before we do anything, these videos, you know, I always tell you they're for your edification purposes only. They're never ever misconstrued advice. But listen, if you take umbrage with anything I'm saying, and some of you absolutely do, just don't ever stop hesitating to reach out to email me, tim@riverasset.com, 855-732-5932. I'm always available to you to answer any of your questions. And listen, the people that make the decisions in the portfolios, Don, Alex, Hunter, they are always available to you too. That's what separates us from stripmalladvisor.com. No plausible deniability. Talking whether you're a client or not, we always make ourselves available to you. That's what makes us a team. We're here to empower individual investors. I'll tell you what, personally, I always learn. Every time somebody emails me or calls me or wants to talk stocks, I get better. And so I love it when you do all of that and involve me in your process and ask questions, because I'm telling you, I learn more than I ever give you. Just by what you talk about and what we converse about. So listen, don't ever stop contacting me. And listen, America's fiduciary right here. Of course, he is always available to you. And listen, a lot of people taking Danny up on that offer to help them get out of those really bad annuities, because once we uncover what annuities really do, you're like, oh my gosh, I can't believe I've been paying fees to some person for the last 10, 15 years. And so Danny can help you out there. And then listen, IPO Club is something. I use charts we talk about in IPO Club, and IPO Club is just an offshoot of what we do at Revere. It's people just like you at home watching our content, and then they've just wanted some place to discuss it with like-minded, nice people. I really focus on the word nice, accommodating, loving, caring, wanting you to get better type people, because they want to get better too. And so all teamwork, all dream work there. At TJ Reazor, if you want to find me on Twitter, I can help you find them. It's a Zoom club, or you know what, you can just email me, tim@riverasset.com. I'll introduce you to the fellas, Mark, Captain Dan, Coach, a bunch of other folks in there too, that I think you will grow to love. Let's see here. And then of course these videos again, just in case you missed it the first time, these videos are for edification purposes only. They're never ever to be misconstrued advice. Want advice, need advice, seek advice. All you have to do, let's see here, is in fact give us a call. Sorry, wayward mouse wanted to go to the chart, not back to the browser. So real quick, S&P's like this beautiful daily chart, right? Strong markets. But let's take a look here under the hood. NQs, oh, I mean, super duper strong, right? Up today again. Just, I mean, these are really nice looking charts. But here is what I'm looking at here. The YMs, right? I think the YMs and the RTYs are foreshadowing, of what's to come. Oops, I keep getting dyslexic here. RTY. Sorry, I do have a little bit of dyslexia, and it kicks my butt occasionally, usually these videos. So here we go. Yeah, right down to the 21. Look, this reversion to the mean would be really healthy here. And so there's something interesting about this pattern that's taking place here. So look at what the RTY did. 3 ATR, where did it come back to? Right to the mean. Okay, so how about the YMs? Close enough for government work, right? 3 ATRs, right back into the zone of the mean. Well, Tim, what about the S&Ps? 3 ATR, no, so strong. They are so incredibly strong. A pause that refreshes back to the mean would be very healthy here, and you should not be shocked if you should get one. Doesn't mean you're going to, but you got this 3 ATR, tried, didn't quite get there. I think you really, it doesn't mean you have to. It doesn't mean you can't make money. It just means that some things you'll be buying extended and elevated, and that is not my way of thinking or trading, and I don't enjoy buying extended. Nobody does. Nobody likes having the case of the FOMO. Speaking of the FOMOs, RIVN. Let's look at the Rivian, right? On a daily chart, of course. Like, Tim, what do you mean? It went from 95 all the way up here, 180. Now it's pulled back. That doesn't look much on the daily chart. Let's go to a 195-minute chart. And you can really start to see, got into the zone of this third ATR, it looks like the daily chart, and it hasn't quite gotten back to the mean. Now, there are options on Rivian. It wouldn't shock me one bit if they pin it like around 150, 160, right? But down here is the mean, and it wouldn't shock me if you came back to test 130. I mean, this is a big move. And this is what happens when everyone's piling in. And I mean, because nobody here watching, right? No one ever has top ticked the stock. Like everyone, of course, everyone has. Everybody's had a case of the FOMOs. And so there's a number of ways you can avoid that. Just don't trade it. And if you do, just know where you are in time and space. I can't tell you how one of the best things I've ever learned is called situational awareness, knowing where you are in time and space, whether it's flying, in the Marine Corps, in life, on the roads driving, and in the markets. And I can't begin to tell you how important having situational awareness is to me. And so I can avoid stuff like this, knowing where I am in time and space. Well, did I get here? No, I just let these things play themselves out. And you're going to miss some moves, but you got to be okay with that. You know, you're going to have an opportunity here to get good stuff when it pulls back. And like here, it was a stock nerd, Mark pointed this out to me. He goes, wow, man, that third ATR. And you can say, well, Tim, here, 3 ATR didn't really pull back. Pull back what, 4.7%? That's no pullback. No, this is the one that you're looking at here. So it pulls back, third ATR, and now you're down, I believe you're down, I got to do it from this angle. I believe you're down 30%. It was Mark that pointed it out to me. Yeah, you're down 31% from that third ATR. That's just what, a couple of Fridays ago. And so you can avoid all this, right? Like you don't buy extended. Hold empirically, don't have sell rules. You can avoid all that pain, because even if you do chase, right, like it's okay. We've all done it. Even if you do chase, let's get this back to a daily. Even if you do chase, you see down at the -1 ATR. Yeah, 31%. You have some rules, and it helps you get out. And so this is pretty. This isn't a bad company. Doesn't mean they're not going to expand. Doesn't mean they're not going to grow. But man, the market can be sure volatile, right? Especially if you're on options on this type of stuff, like RIVN. I mean, that's a huge move. And so obviously 15% in one day on just a huge stock now. And so what do I like to do? Well, I like to look at stuff like this, Chipotle. And by the way, this on the day, let's get it to a light bar chart. This is really, I mean, does that look great to you? No, it doesn't. But let's extend it out a little bit here. This is my jam right here, this weekly setup. And you're probably going to base here a little bit, right? You've had earnings. So you're just holding serve at the 21. 21 is where? Oh, get my marker off. 21, 21. Down here at what, 19? Sorry, I've got something blocking me that you can't see on camera. 1796, you're like right there, right? So you're probably going to jostle around in here if you get a down day in the market. Maybe this jostles around, but this is kind of the weekly setup that I crave. I dig this. I like CMG. And so where's your low risk entry point? Yes, this weekly 21. But look, it has been in the zone here. It's been in the zone of the weekly 21 for 1, 2, 3, 4, 5, 6. You know what that's called? That's good enough for a flat base, right? Flat bases are beautiful. Well, Tim, why are flat bases so important to you? Like, just like I like 3 weeks tight patterns, flat bases are continuation patterns. Oh, tell me more, Tim. So when you have a move up of 15 to 20%, and then you kind of just, Taylor Swift it, you kind of shake it off, right? And you move sideways, but you don't correct more than say, 15% or so on either side. And you're just kind of hanging out for at least 3 weeks, 1% of each other closes, or 5 weeks in that 15% range. Those are continuation patterns. And if the story of the stock is still intact and the market is still intact, it's a big one, then these typically go on to make further moves. I like that here in Chipotle, okay? And then let's talk a little further out. Can we talk a little gold? A little gold. Is it gonna rain gold? I don't know, but you can see the weekly white bar. Say what? The weekly white bar on 1785. So we'll just call that for close enough for government work, right? It's about $100 higher here. If this isn't the chart I want to show you, I don't think gold's really even gotten started. This is the we'll look at GLD here. Oh, we'll just hit continue and hope the chart still keep rocking and rolling. But look here, this is a monthly 21. You've just been hanging out. If this thing starts going, it'll be super nice. Look at it to challenge the old highs. And I'm gonna see if that shows up on GLD, because that's the gold futures contract that I was looking at. Yeah, GLD here. And so, yeah, that would be 194. Look for a move up to 200. Okay, and so that is a monthly chart. So I like gold. It doesn't mean gold's not gonna. There's a monthly chart, folks, but this is a beautiful pattern right here. So you had a big move up, same setup, right? Big move up, and now all you're doing is what? Coming down. You touch the weekly one, to weekly 21, actually monthly 21, and now you're just flat basing, just basing. You're buying your time. Now, does it do this? Okay, well, if it does and you're along for the ride, that's fantastic. What if it were to start closing here? Well, then what do? End the trade. Get out. No rush on a monthly chart though. But once they get going, you can be in that trade for a good long while. And then for my friends that think I am completely bearish and always off my rocker, listen, let's go to a daily of the dollar. It's really hard to want to be bearish here. The market has just ground people into dirt in the face of a rising dollar, okay? And so that used to be, well, if the dollar was going to do this, markets would be down here, hell and donation. And they're just not. Well, maybe not yet. But if the dollar is going to come off, the relationship was, and we'll see if it still is, that when the dollar rings the bell up here and starts to revert back to the mean, because everything eventually reverts back to the mean, markets go, whoop. So I don't think the markets are easy here. You're also on options expiration week, which adds a little bit of confusion. So with that, hopefully stock owners, market lovers, that all helps. And listen, of course, always here to help you. So I'll tell you what, Hunt and Mazinga is your video tomorrow night, and we'll have the podcast Friday, and we'll see you at the next update.